This is a replay session to practice a key setup from Friday this week, Friday the 5th of September 2025. And I find this is a very effective way to practice executions, noting the right things at the right time, because you have the benefit of hindsight. And also, when your brain experiences things, it doesn't know the difference between practice and the actual thing. Same with visualization, but this is even better than visualizing because you're essentially doing the actual thing. So as I talk through the session, it is not live. Just want to make that clear. I'm not pretending it's live or anything, but I will be, for my own sake, pretending that it is live. So I'll be talking as if I'm seeing things as they're happening and noting things in real time. And yeah, we'll be playing it through the price action from Friday and trading it how I would have traded it in the perfect scenario to get that experience. So I'm going to chuck this up in the corner here. There we go. And yeah, starting off on over this side. So this is the daily chart. We've got the 15-minute on the right, just to give some context on the high time frame of where we are at. So as you can see, we have had this big rally since this major pullback recently. And as we've reached up to this area, we've begun to create these large ranges and then pulling back to deep discounts of the range. It is beginning to show weakness in order flow. And I say that because, as you can see, we actually did work below this impulse low on the daily charts all the way over here, began rejecting higher, and then came straight back down and took out that low once again on Tuesday this week. So that is not an indication of strong bullish order flow. We're also very rangy looking. So we're going to deep premiums and deep discounts. You can see that with how, for example, with this fair value gap, if you draw that out, you can see that we actually closed above it. So if we were bullish, we had just taken sell side, we had rejected higher, we had already painted in the lower end of this inefficiency very thoroughly, and then closed above that inefficiency. So if we were bullish, you would not want to see us come back below the midpoint of this gap. However, on Friday last week, we actually dropped straight back down below it, took out the low again on Monday and Tuesday, and that's just showing a very range-bound condition. We're disrespecting both discounts and premiums at the same time. That indicates consolidation, and it means that the order flow is changing, for one, and also that we can expect that we can easily reach to deep premiums and discounts of that range and then reverse. On top of that, if we look at ES, you can see that ES has been making higher highs, whereas NASDAQ has not. So especially here, you can see NASDAQ making a lower high as ES makes a higher high, and then the same going into last week's high with ES taking it out. So that's showing some divergence, showing that we may be getting a change soon. That doesn't mean I'm going to short right here. It means that I'm not going to be looking for bullish order flow and bearish order flow to hold very strongly. Very similar to this area back here. If you look at that, very range bound, and in this area everyone was getting confused. Like down here it looks super bearish, all of a sudden we break this high, it looks bullish again, never mind bearish, and then whoever jumped in bearish got taken out and everyone's bullish again up at this high. And that's just because the order flow was changing from a bull market into a bear market, and we get that kind of confusing price action that chops everyone up at the top. It looks kind of similar at the moment, it looks very similar in fact. So at this point here, this is Thursday's close. This really stood out to me as a key liquidity pool, and because we had been showing bearish order flow coming back down, but because I recognized this condition, I also anticipated that we could easily take out this high again as well. We had actually done that going just ahead of the open. If I draw these lines out, that's the previous week high. You can see the NFP at 8:30 actually ripped up and took that already. And then we have this old previous week high up here as well. that we'd fallen short of the previous week, and now finally we were hitting. So both of these levels were hit at NFP, and that's key because as I jump over to the other chart in a second here, I'll explain why these are important levels for me. But in general, if we look at the overall view of everything, this is Thursday's price action, have 9:30 we're on that yellow candle, took out sell sides, and we rallied all day. So during the entirety of the day, we were going up. This and all the way into the close. This gives the narrative of any traders who are long, they need a nice strong looking low to trail their stops. Now, there aren't any very obvious swing lows in this area. The only ones that really stand out to me would be this impulse low on the 15-minute chart. So I can mark, just leave it like that. Mark that one out, and then also we have an actual nice swing low all the way down here as well, which could be hit as well. The one that jumps out to me the most is this one. And then we have the regular trading hours close all the way over here. So I'm going to draw out the regular trading hour close like that. And you can see that going into the close, we had this impulsive run higher and no clear area for trailed stops to form. We then gapped up, continued pushing higher overnight before eventually only taking out a short-term low just before NFP and then ripping higher into these high time frame levels. Now, because we're in this range-bound condition, sure, there are smooth highs above here. However, it's more likely to reach from a deep premium back down to a discount of the range. So I would anticipate that we could easily make a high up here. And that's what I'm looking for. And that fits in really nicely with a framework that I want to use today. And that framework is the RTH Trailed Stops framework. Essentially what that is I'm looking for a gap up or gap down, but in this case, a gap higher. So from the regular trading hours close over here, we closed at 4 p.m. there, and now we're going to be opening up on this next candle at 9:30, all the way over the big gap. When that happens, I imagine that a lot of traders get tripped in on the long side. So let's say market on open orders above, let's say this old previous week high, they're all going to get triggered in long. So if people are buying up here, they're going to want a nice place to trail their stop loss if they want to protect their position. And where are they going to protect their stop? So if I go to RTH, you can kind of get a nice visual representation. If we're going to open up, let's say all the way up here, people need somewhere in this big range to trail their stop. So what I like to see is us engineer a low and then entice higher and then eventually attack that low. And that is the model, and then that can fit into the bigger picture where we may come down to these lows as well. The other thing that's is important with this model is looking for the narrative on the regular trading hours. I'll move this down a bit. So this is the regular trading hours. This is the last regular trading hour candle print at 4:14 p.m. The narrative at the regular trading hours is that we were enticing longs into the close. So that's the main thing there, is just knowing that the last thing people saw was that we were enticing people to buy and to go long. Narrative pre-market. So I'll jump back over to the ETH. Make sure I don't lose that box. So on the electronic trading hours, we have that same narrative. So narrative RTH, I'll write it out actually. We are tossing higher. And then on the electronic hours, you can see the exact same thing. We are enticing traders higher. So since the NFP low, we had this rally. Anyone who wanted to buy at NFP saw this green candle. They all buy. We pull back, engineer a nice low. Whoever bought, they now have a good place to trail their stops. So that's why I have this marked out. And then we continue climbing higher. At this point at 9.29, we still haven't taken out any of those buyers from this big rally. That combined with the regular trading hours narrative, both indicating the same thing, with the gap higher, makes this a very, very high probability model to play out and framework. The next thing that's important for this model and this framework is the obvious liquidity. So if we are going to be running higher to entice longs and then attacking the lows, I want to know that we're taking out some nice liquidity. In this case, obviously we are hitting this previous week high if it loads. So a very major liquidity level on this high, and then also the old previous week high. So I know that we're hitting major liquidity levels, and as long as we're above this at some point during the RTH, then that is exactly what I'm looking at. So previous week high, just write that. And these are the sequence of events that I'm looking for. Obviously the gap up, that's what sets the stage. Then 1, engineer a low for trailed stops. 2, entice higher. 3, attack the trailed stops. And I'm going to be playing through at with this. So there's the 9:30 open now, and once again, I'm not just going to be jumping in straight away. It could melt lower, just how it is, but this narrative, specifically, I need to have a strong narrative that we have really enticed people onto the wrong side of the market, and especially at 9:30 open, sometimes it will just melt down, but I need some indication that we're enticing long. So I really like this rally straight out the gate, tapping into that 900 level. The 900s are interesting to me because if we go all the way over to the left on this 5-minute chart and find what that lines up with, you can see that there is actually no pre-existing liquidity at the 900s, so we don't have any perfect retest of the 900s. These institutional levels are often used to either engineer liquidity or take liquidity. So if we had already had a high here, I'd expect us to run above it to rate it. But because there's nothing at this level yet, there's the likelihood that we actually may be coming here in order to engineer liquidity and then entice away from it, which fits in with the narrative I'm looking for. So that's just the news showing the NFP, the 8:30. That's about the only real main news we had today. So when I'm watching this price action, I'm looking at these wicks. To me, that is not exactly what I want to see, because long wicks a lot of the time are put there to entice traders into the market, and the idea is that a long wick like that looks like a bearish rejection, which it can be, but it can also be enticing. And if I only have wicks to the upside and none to the downside, then I don't want to be looking for shorts just yet. I want the narrative, if I'm looking for a short, I want there to be wicks below me that suggests the narrative that we're enticing longs into the market. And so while we have just the wicks to the upside, I need more information first. We also haven't engineered a swing low yet and enticed away from it. We've just been in this high resistance move lower, as you can see on the 15-second chart. But yeah, nothing too much to do just yet. So I'll be waiting. I'll play that a little bit faster as well. As far as targets go to the downside, I already mentioned we have the NFP low, the regular trading hours close, this nice impulse low that's actually run at 1550 as well. And if I go on to here and turn on the hourly open, this shows me all the 1 hour opening prices. Okay, I like that rate of that high and fast rejection lower. And I like how we're engineering a nice impulse high, so that could come in handy later on. But back over to the 5-minute chart, if we look at all these hourly prices, what I'm looking at is where are we in relation to the open. So when we are at above the open, such as above 1 a.m., above midnight, that indicates a premium. If we have multiple opening prices at a similar level, that can indicate an original consolidation, which, as you can see, NFP already hit this original consolidation. Then if I drag down, I really like how throughout the day yesterday, we were held as premium above 2 p.m. 3 p.m. went right to a premium, and so did 4 p.m. So all of this is pricing in a premium. This really stands out to me. We have that swing low that's really obvious on the 15-minute chart, and then right there, 12 and 1 p.m., perfectly equal opening prices. That indicates that we have an original consolidation down there. So that becomes a very likely target, and I would actually just draw out that line as so. And write OC or so that could also be a potential target. It's quite a way down there, but definitely a potential. Now, so far, we haven't enticed any longs yet. We've been grinding lower, pushing lower. I really want to see us have at least some sort of a rally high prior to hitting this NFP low. Obviously, I can't predict exactly how this day would play out. Like maybe we take this low and then entice high and then come lower, or maybe we run and make a new high and then turnarounds. But so I need to develop my game plan as the information is given to me. But I have the general parameter of what I'm looking for, which is, but I'll lock this to the screen so I can see it, which is 1, engineer a low for trailed stops. So that might be this here. 2, enticing high. 3, attack trailed stops. And then outside of that model, that fits in really nicely with this, with the pre-market narrative and the regular trading hour narrative, which tells me we're very likely to hit this low and below. Now on the 5 minutes, we have a bit of a work here, but still not enough enticement from that level just yet. I really like this low being the NFP trailed low. I'll put that over there actually. So it looks really nice. And one other thing I forgot to mention is the midnight price and the midnight. So the midnight's over here, and 8:30 is obviously that candle there. And the fact that we are above both of these levels indicates that we are at a premium. Okay, I'm really liking this rally at 9:41. I want to see if we can hit this impulse high and show any rejection. Now looking over at ES, you can see that ES has got a very similar type of scenario, however, just not as pretty. And it's been holding up a lot stronger than NASDAQ so far. NASDAQ's been sinking low. ES looks like it may want this high, so just keeping that in mind, and that's the 9:30 a.m. high. I want to see if it has any willingness to hit it. Now, because I'm looking for an impulse rejection from this high, what that means is that I want to see us hit the high and reject lower from it, failing to close back above it, or basically once I hit the high, I want us to reject away from it and not keep on pushing into the high. If we run into it and then keep pushing multiple times, like if we just hit it then, if it did that and then started pushing like that, then that's not a good sign. That's to be an impulse rejection failure. But if we can do this and give a nice displacement lower, that would indicate this is a likely impulse rejection. And how I would get in is I'd be looking at a impulse low, and I'd be looking for the antithesis of this model, this entry technique, to get in on the opposing side. So impulse rejection becomes impulse rejection failure. You could either use this low, or ideally want to use the most recent impulsive low that makes the high. So this high appears on the 1 minute chart, means that I'm looking for rejection on this time frame. We're put on 3 contracts. But looking at that displacement lower, that looks nice. So when the impulse rejection is on the 1 minute, I'm looking to the 15-second for the rejection failure. And how I know that I get the entry signal is if we get below this low, we begin to reject back up, but then get a closure back below this low. That is the signal. So I'll be looking for that to happen. But so far, nothing has told me just yet what I need to see. We did just tap this low as well. So far showing a bit of rejection back up. So it might take out this high. But as long as we can get a closure back below here, then that will be the entry. So still closing above on 15 seconds, but just prepared to hit the short button in case we do. If this candle closes above this high and it immediately rejects straight back down, then that is fine. That would just be a manipulation closure. But if we close back above that high and then just sit there, then that will be no trade. But just ready on that finger on the trigger just for that, in case we do get that. The 5 minutes, I really like this. We have a large up closing candle there. What time is it? So and we're about to, just to pause real quick, and just looking at the 15-minute chart, you can see that we've just printed this really long wick as well. So really long wick's just been printed. That is giving me the narrative that people see this as a bullish rejection. Anyone who wants to trail their stops, I know there's a lot of sell side down there now, so that is also on our side, as well as the fact that this 5 minute just closed with a large, big up closing candle that also suggests we're enticing longs. So I think this is all good to go. As long as we get this closure below, then that'll be the entry. So nice to push lower, just waiting for that 15-second to close, and I'll smack the short as long as it closes below. There we go. So shorting right there. Stop loss goes above that failure swing. Beautiful displacement low so far. My eyes jump straight down to this impulse low. I want to see us not reject from this low once we get down there. And we should leave a bit of a breakaway gap from this area, because this large up close and then consolidating up there, that should suggest that we traps traders long. I really like how 945 dropping immediately lower. It's showing a really good sign, but it needs to continue pushing. If it begins to come straight back up, then it might not be quite what we're after. It's just watching this, but I'm pretty confident we should hit this impulse low. I'll make this visible just on this time frame. So sitting just below the 20s, that's what these lines are. That's the 50s, sorry. And so that just shows the institutional level. Okay, pushing up a bit aggressively here. Don't really like that. This I would expect to be a breakaway gap. Looking like it might overlap straight back up, which is not ideal. So I will be ready to mitigate this position if required. And that's because it's not showing me what I need to see so far. This needs to really reject lower, and I want to see it hit this low. So I'm going to be monitoring these short-term lows as well as this one down here. Just want to see if we can get a nice bit of movement below that. Okay, watching to see if we can reject from this high. This is the final chance, but this could actually be an intermediate term high, because this range from this low, this high is all balanced, and this high already retraced this inefficiency on the drop down and then started rejecting lower. So the fact that we took it out, that's essentially us taking out an intermediate term high. So now there's the very good chance that we're actually coming down here just to take this deep internal range out. So I'm actually going to go break even now. and be prepared to actually, if we hit this low and we begin to reject, I will just cut the entire position. So the only thing that will save us now is if we get a really strong push lower. No, don't like that. Cool, I'm out of that position. Still made a good 1 hour or so because I was able to mitigate. And once again, the reason I mitigated that is because this situation where we have this consolidation at the high of the big up closing M5 candle, that should suggest that we are enticing longs and then trapping them at the highs. So the fact that we then come straight back up multiple times, that's giving anyone too much time to chase the short and to mitigate, as well as the fact that we've got these long wicks now above us, which, as I mentioned earlier, the same with this situation, could be indicative that we are enticing people to get short. So if they want people to sell, then that is not when I want to sell. So I'll be monitoring what happens as we run above this candle here. Just try and get my charts looking all nice. I'll clean up this a bit. But as you can see, run straight back up for this high. So good thing I was able to mitigate that and recognize that situation early on. I find it really interesting that we did not take out this impulse low. If we were bullish, I would have expected that to definitely get taken, and I'm not bullish, so that is very good for the trade still being valid. And I'll still be putting on those 3 contracts if I get an entry. Okay, closing with a really long 5-minute wick. So that's interesting to see as well. So now we have a large up closing candle. We also have a long wick on the 5-minute, as well as that long wick on the 15-minute that I showed you earlier. And if we look at ES has just tapped that high of day. So we've now got some nice SMT on the highs. I really like that. I'll be really wanting to watch what happens here. I don't have any swing lows in this entire run up, which means that I would be waiting to see. I won't be able to get a market structure shift within this range on this time frame. Which means I'm not just going to jump in right here. So that's going back to the same concept as I showed over here with the impulse rejection and then low time frame impulse rejection failure. I'm unable to do the impulse rejection failure over here because there isn't a swing low yet, but it looks like we may be putting one in here. So making a new high on NASDAQ, see what ES is doing. ES is actually still selling off. So we have the SMT on the highs. Now NASDAQ's making a new high. And as long as we don't take out this high, this could be really nice. So just monitoring to see if we can take out this high or not. If we fail to do so, then that could be some nice SMT to confirm the timing aspect of it. And what I'm really watching is to see if ES also fails to make a higher high. And then that could potentially be reverse SMT or inverse SMT. So ES is pushing lower. You can see ES beginning to drop right now. Oh, a really nice drop there. And it looks like we have that reverse SMT. So this is often an indication of very, very high quality SMT. I'm now jumping across the 15-second chart, see if I can get an entry here. What I'd need to see to use this impulse rejection failure entry is us to deliver buy side above here and then close back below. So I'll be prepared to jump in short if we get that. So if we can run into this and then close back below, then that'd be a short entry. But ES showing that strong push low, showing that we are rejecting. And I really like how we first engineer this high, have this large up closing candle, and then immediately dropping lower. Okay, it looks like it's just taking out these lows without me so far. So we're looking for some more narrative as to how to get in. But nice market structure shift, then already hitting this impulse low. So I will now delete that and just get rid of all the lines that we don't really need. Just that. SMT, that is really key. That gives me a lot of confidence in this trade. So I'm also watching, got my eyes on this long wick. Because we just hit ERL here, it means that we can run up to premium of this range from this high down to this low. But if we can close back below this wick after having retraced to a premium from this high to this low, then that could become a nice entry point right there, expecting that that wick should hold. So I'll be ready to enter in short if we can get that closure back below this next candle. Also looking at this premium wick up here as well. The other thing that really jumps out to me is this swing high. So the reason why I draw out this swing high is because it is the one that we displaced through on the way to take out this high. It's essentially like a inversion fair value gap before raiding liquidity. This is a very similar kind of thing, but it's a swing high that we displaced through on the way to taking out liquidity. And what I want to see is us reject from that. So it looks like we're pushing lower already, right on the new 5-minute candle. And this is very interesting to me as well. We have a long wick on 5 minutes, another long wick that took out that low and began rejecting higher. So if you are bullish and you see a really long wick that gets raided and then rejected with another long wick, that should hold. That should send us higher. So the fact that we've just taken out this low for a second time, that is a very strong indication that we're bearish, and that is actually an entry model in of itself. I'll mark out both of these lows so we can see them. So that's that 5-minute low that we just broke there, and this was also a 5-minute wick. So we broke this. This is a 5-minute long wick we printed. We then rated it, rejected higher, and now all of a sudden we're straight back down to that low. So that's exactly what I want to see. I want to get short now, and the stop would go above here. So I'm going to be looking to get short and try and get shorts to the 50s. So as soon as we hit the 50s, I'm just watching this 15-second chart to make sure I get that fill exactly where I want it. You can see a limit order right above that high is what I'd do. Ideally, actually, I'd probably be getting in at the 48s. That's so that I'm not demanding it does at 50, because sometimes it'll go to just a few points below. So maybe 47.75 would be fine. And as you can see, we actually already hit that level, I believe. So I should have already been in, possibly. But I think we can still get this run above this high. If you look at the 15-second chart, it's just showing like it wants to take out that high once again. And there we go. Not quite the best timing, but good enough. And the stop goes above this high, and the reason why is because that's the failure swing after raiding this low. So we raid this is that long 5-minute wick over here. We then raid it on this candle here and begin to reject higher. After rejecting higher, we then have this failure swing and aggressive drop back down that takes out the low. So that makes this the failure swing, meaning that that is the invalidation. And we now have our trade on. As you can see, we just hit the 50s and we're rejecting so far. So I'm really liking this as well, because we have, we're almost half an hour into the session, and we've been the entire time hovering above this really obvious sell side pull. So I'm very confident in us reaching down to this area and hitting it. And this is where I want to start looking for signatures such as last second wicks. And actually you can see that we already have that. We have this minute here, and if I go to the next minute, you can look on the 15-second chart and see it's marking out this. That means that this candle here was the last 15 seconds of this candle, of this 1 minute candle, and it dropped aggressively low. So that's a good sign when we are showing these strong rejections, and then the majority of the candle's movement is happening in the final 25% of the duration. It's just a good signature. Right here, it's not giving me quite the narrative yet to take a trade based off of that. But if we were in a clear, fast moving market and I saw that kind of signature, that could actually offer us a entry signal. So taking out that high once again, this is at 9:59, so next minute will be the 10 a.m. candle. So we'll be opening a new hourly candle here as well, and a new 15. What I'll be looking for as we sell off, obviously this for the framework, that is all you need. But I'm looking for us to reach down here, so I'm going to be monitoring as we hit this low. Do we continue pushing down through it? And looking for us to reach down to this NFP trailed low. Once we hit that, I want to measure the willingness to reject from here or fail to do so. And we may even get some more entries down here to add to the position if it can show us a failure to reject. So I really like how we just had this nice up closing candle right before 10 a.m. and now 10 a.m. is dropping. So I'm going to move this out of the way for now, but you can see what it is. Beautiful push low right there. So hitting this low, I want to see if we can continue pushing from here. So I don't like that rejection so far. It's not ideal. But looking at the 15-second chart, okay, I like how we're overlapping this candle right away. So we printed a long wick, but if you look at the 15-second chart, you can see that that wick formed less than halfway into the candle that wick formed, meaning that it wasn't a last second wick, so likely being used to entice traders into the position. Now we have the hundreds down here as well. I'm going to be monitoring as we get near that level, specifically to 803 right there. So I want to see if we show a sharp rejection from there back up, or if we continue pushing down. And I'm going to be taking up to 3 partials, so have that on like that. Now once we hit this low, I'll be exiting at least one of my position, and then if we can show a impulse rejection failure, I'll get back into the position. Ideally, I'd like to see a portion of this left open. If we end up closing all the way up here, I'll be watching to see if we can reject from this high, but it'd have to be extremely strong rejection back low. Otherwise, I'll look to close the position. But so far, it is showing me all I need to see to hold on to the position. It's looking good. And I really like the narrative of the amount of time we spent above this low. So we already spent half an hour, which is plenty of time to entice plenty of people to buy and to get them to put their stops down here. So it is 10:04, this is 10:05. We just consolidated for 4 minutes and then got this nice strong up closing candle. Want to see if this candle can reject straight back down. That's looking beautiful. Really nice right there. Getting that change of state. So I'd expect this to continue pushing lower now. And if we can, then I'll be trading my stop to that high. Beautiful. So stop's now down there because we did just hit this low. As I mentioned, I was going to take a partial down there. So get another push into that. So monitoring, oops, still got some drawings here. So pushing into that low, I like how we began rejecting it, and we have just, as you can see, run up and hit this high. So take one off, never mind. I'll hold on to the position because I'm pretty confident in this. I like how we closed down here. And also, if we look at the 15-second chart, what I need to see is, oops, what was that? Yeah, so I need to slide down. That's what the problem is. It's moving too fast for me. So the impulse rejection failure is what I'm looking for here. This low, if we were bullish, you'd expect us to hit this low and reject straight back up. So what I want to see is us fail to do so. We did hit the low on this wick right here, and as you can see, following that, we ran and we took out this short-term high. So that's showing buy-side delivery following hitting that low. And now we're pushing back into that. So at the moment, I am not taking a short entry just yet, because I wanted to really show that it had an attempt at going higher. So far, it's kind of just consolidating down here. But we have this rally up here, and then a closure back above the high that took out a short-term high, and now it's looking like it's dropping back down. So if we get a closure down here on this 1 minute chart, it'd be a great place to add, and I'll be adding 2 to my position and trailing the stop above that swing that just took out the low. So really strong rejection there. If this starts pushing up now, it was also rejecting from the 80s. So that's not what I want to see for bearishness. But as long as it can close back below, that would indicate that it is failing to head higher. Okay, right there we go. Adding to position, trailing the stop down to, if you look at the 15-second charts, oops, that should actually be up here. So that swing high that was made after hitting the impulse low. So that first swing high, that's where my stop is. And I'm looking for that push low. As long as we get this push lower, that's looking really good. I want to see if we can get down to the 50s, and I'll be taking a partial down there, probably of the 2 that I just added on. And now, as you can see, I'm got a lot more leverage in my position, and I'm already in profit. So this is looking very high probability, and the whole premise for this as an entry is that it's an impulse rejection failure. We hit a low, an impulse low that we should reject from. We begin to show intention of rejecting, but then fail to do so and break straight back down. I really like this long wick that we're rapidly overlapping as well. And this wick as well, the way that it printed, if you look at the 15-second charts, you can see that it's printed the majority of the wick in the first 30 seconds of the candle. And so that indicates that we were possibly spending a lot of time with that wick printed in order to entice people to buy. So I'll be watching this wick to see if we can remain below it. That's ideal. Now, because we are looking to accelerate down into this low, I'm looking for signatures in price that indicate that weakness. One of those signatures could be a breakaway gap, and as you can see, after we had this large up closing candle, we then ran lower really aggressively on a new 5 minute, once again overlapping all these long wicks. And since doing that, we left this inefficiency completely unfilled. You can't see it on this chart as such, on the 1 minute, but we essentially broke down aggressively and we failed to retrace deep into that range and kind of just sat down here. And now we're pushing lower again while leaving these long wicks. So that's indicating potential for a breakaway gap as well, which is exactly what I want to see. Now, once again, I'm looking to see if I can reach down here for a partial. The 8 a.m. price could have also been good because we got that swing low there as well. Realistically, I should have actually taken a partial down there at the 8 a.m. price. It's hard to emulate exactly how I would be trading this real time on here in replay, but so I'm going to actually take off a partial of 1 just because we have hit this 8 a.m. Impulse old low right down there. Now, just looking at this, we just ran above this high, and you can see that last 15 seconds printed that long wick. So this is actually a great place to add. So, oh shit. Fuck. Oh, there we go. So adding in with a stop now above that high, and I'm going to be taking off a partial of 3 down at this low or more. So the reason I added just there, that's because we have this long wick that just printed, and I'm expecting speed and acceleration down into this low. So make sure I'm ready to take a partial again. There we go. So just closed a nice partial down here. And as you can see, my average has been brought down a lot, but I just booked 6 grand in profit, so that is okay. We've got the midnight price down here. It's at a deep discount to the range, so we'll look to take off another one down there. But it's hitting that 50s, and that's a great place for a partial and a deep discount to the range. But yeah, the reason I took this as an entry is because we have this long wick. And that long wick also was printed while we're expecting speed and acceleration into this level. So I'm going to take that off there. So because we're hitting that midnight price at a deep discount, and now I'm going to be looking for us to push down into the NFP low and below it. And I think there's a very good chance we can easily reach down to the hundreds because that is where the high of day is from yesterday, as well as a nice little push down below this NFP low. We have the 20s sitting just below it. I'll be monitoring how we react to the 20s, but expecting we should be able to continue pushing lower. Oops. But now that we are nearing the lows, I definitely wouldn't want it coming back above the midpoint of that wick. And then because we're nearing the lows, we're leaving these inefficiencies, I'd actually not allow it to come back up to there. So it is now, where I added these last 4 contracts was at this, essentially at this price just down here. So that's why my entry is all the way down here. In fact, it's not the best fill. If I had been on the right chart, I would have got a fill a bit further up, but that's okay. So just monitoring this low. I want to see us push below it and through it with aggression. And I'll be ready to take off 2 contracts should that not happen, and also manage risk further. And because my entry was down here, I will be going break even as soon as we hit that low. And essentially just looking to see how far below the NFP low I can get a reasonable partial. But showing a lot of weakness, exactly what I want to see. So monitoring ES. ES has just made equal lows with the NFP low. Hasn't hit it just yet. So back to this wick. I saw the wick print. I'm expecting speed. The very next candle, opens, and you can see that the wick from that 1 minute printed on this 15-second candle. So that was the final 15 seconds of the 1 minute candle printed the entirety of the wick. That shows that this is a likely real rejection. And if it is a real rejection, it means that the high won't get taken out. So as soon as that candle opens, I can now enter in and trail my stop to that high. So we did just hit that low. I want to see us push down below that. I'm ready to take something off if we don't manage to. So hitting the 20s down there, that's great. I want to see us continue to push. Beautiful. Cool. And if we can get down a bit closer to the 700s, that'll do. Cool. Took 2 off there. It's a really nice fill. A nice strong push lower. If we can get a push down below the 100s as well, down to about the 90s, that regular trading hour close, I'll take 1 more off. And then that is just a really nice trade. That'll do. Cool. And yeah, in this one I will be holding as a runner. I'm happy with that as a trade. We're quite extended, hitting some major levels. And there is always the possibility that we may want to retrace back up to here. And so I'm happy at closing the trade while nice and extended and accelerating into these key levels. And then holding just 1 as a runner to see if we can get some bonus out of it. And put it in a bit in profit would be good. Put it there. But yeah, overall, really nice trade. Exactly what I was looking for. This is a really A+ situation because of we have, as I'll go over it real quick. So we had the regular trading hour stops framework. So we had the gap up. We also were above midnight and 8:30. So that makes it also very high probability that we're at a premium. And then we have the regular trading hour narrative, which on the 5-minute chart we are enticing longs going into the close. We then have the pre-market narrative. We were also enticing longs going into the open. I'm looking for a short, it's exactly what I want to see. And then we have very clear, obvious liquidity that we are hitting here at the open. So this old previous week high and this previous week high. So opening with a big gap up above buy side, while at a deep premium, and then these really obvious lows to target. Made it very, very high probability trade, and yeah, I think I executed really well on it. This entry over here with the 15 seconds impulse rejection failure, that was a very valid entry and it fit all the criteria. That's because we had engineered a low, which was step 1, engineered a low, enticed higher, and then I had a impulse high and a specific entry technique that allows me to get short right there on that closure of that candle below the impulse low. Got short there, pushed low aggressively, really nice, but then the fact that it immediately came back up and then took out the high again, that was a very big red warning sign. And so I was monitoring as we hit these lows to see if it showed me that it wanted to just melt through them to this low, which I thought it would. Or if it started rejecting back up, that was a great place to jump out. And I still made a good 1R on that trade, despite being wrong. And then this here was very nice, push low. And what the main entry technique from today actually was in the end was based on the 5-minute chart. And you see these long wicks that are rejecting and running higher. So when we raise a long wick like that and begin rejecting back up, that should be a very, very bullish signature that sends us higher. But when that fails and we melt straight back down over that wick, that becomes a really nice failure swing on the lower time frame, meaning this swing higher that failed to reject back up. And now I can use that as invalidation for the trade, get in short in this area. Also trusting that that failure swing also ran out as this impulse high, or this short-term high on the left side of the curve. So that's really showing really weak bearish order flow and pushing lower nicely. So still pushing lower really well here. I think I'll be trailing my stop using the 2-minute chart. I shouldn't have changed it over. Oh well. It might glitch some of the candles, but each time we break a 2-minute candle low, I'll be trailing my stop down to that. And then see how low it wants to go based on that. Again, this nice push so far. But yeah, based on the 5-minute chart, that's long wick that gets rated by this long wick and begins rejecting higher. That should be very bullish, but then it overlaps it again, and that just shows very weak order flow, and that it's failing, and that I can trust that failure swing will remain intact, as well as the narrative behind these candles. We have 1, 2, 3, 4 long 5-minute wicks that retail will see, or traders will typically see as a bullish rejection. And because I'm bearish, it's exactly what I want to see. And also the reason why another reason why it was a really nice entry is because this entire half hour from 9:30 to 10 a.m. we were consolidating above this obvious impulse low. So we know that there's a large pool of liquidity down there building up, and once we start moving towards this, we're likely to continuously accelerate into it. So we've now broken, haven't quite. Once we break this candle's low, my stop will be trailed to this candle's high. Because it's only one position left on, I'm now just trailing it following the previous 2-minute candle high. It's a very simple trailing technique. Once we hit this low, if we are very extended when we hit this 1550 low, which is actually that one right there. So the impulse low at 1550 at market on close macro that rallied into the close, that becomes a potentially a really nice target as well. Let's see if I can speed this up a bit. Just showing that really nice melt lower. So now we can now trail the stop again. See that we just broke that candle's low. It's moving down to here. See if it wants to take us out or not. If it does, that is fine. And if not, then keeps on pushing. So that's what's nice about this particular model, is we get these, well, not model, this is my momentum and my M2 trailing stop frame. Well, it's not mine, but M2 trailing stop, you just trail it on the previous 2-minute candle high. So really simple, basic, arbitrary technique. But when you're in a fast moving market, that 2-minute candle high typically will not get taken out until we are nearing the end of the trend. If we can tap below this low, then I'll trail my stop to this high. And because we're leaving all these smooth highs in this range, if we do start showing rejection from below this low, I'll just exit the position there. But I'll jump down to a slower time. There we go. But just got to give it room to breathe, and this gives me a very objective way to trail my stop. Always watching to see if we can take out this low. So spending a lot of time just hovering here. The more time we spend just hovering below these highs makes me think that once we do take out this low, we're more likely to reverse back up. So I will be prepared to close the position if I need to. There we go, and also trailing to the most previous 2-minute candle high. Now watching this low down here, we've also got the 20 sitting just below, we've already hit, and that looks not too good. No. Beautiful. So that's a very, very nice trade. I'm really happy with that. And yeah, let's see how much that was from the actual entry. So go to the 1 minute chart first. If we look at from the entry, which would have been right here at the 50s, stop loss above that high, let's entry a bit lower, and then that was the entry, and then we're targeting that first low, that's just 2.2, but then down to the NFP low, that's a good 5R, and down to this 1550 low, that gives it almost a 10R. So really nice. Yeah, really nice trade, really happy with that. And I will also, just for complete the sake, I did actually manage to catch both of these trades on my actual accounts, not replay mode, which I'll show real quick just because I can. On my challenge accounts, I caught the first trade and then switched over to this practice account for the second on Top Step X, and I'll hide everything, but this is the executions. I actually entered a little bit earlier on this one. I didn't see the long 5 minute wick that got overlaps until later on, but I entered a bit early here using the midpoint of this wick. I then got straight back out because I realized that we had hit ERL and it could close back above, and so I changed my mind because it was rejecting this low. But then as soon as we got back below, I then saw that entry, and you can see that my entries are at 49.75, so one tick below the 50s. Partials took them way too early, and you can see that I took one at the 20s, which was, so essentially once we hit this low, it's not really too early. This is actually, the RTH trailed stop model says that this is the main target, but obviously in the context of this bigger picture, these also became really high probability. So potentially could have held through this, but I don't think there's anything wrong with taking something off right here, especially seeing with how we were really rangy in here. But once we got this push up and then this nice aggressive push lower, I could have easily, rather than taking partials here, although at this low, to be fair, it is a good spot for a partial, but I should have been prepared to add it back on. I wasn't actually looking for that RTH trailed stop model. I should delete all this so I can draw on it. So if you remember from the other chart, we had this level here drawn out as this low, the NFP trailed low. And what I was looking for is, do we show failure to reject back up? So we start to reject back up and then fail and close that 1 minute straight back below. That's what I should have been looking for right here. So what I should have done is I should have taken the partial as we hit that low, and then as soon as it's rejected back up, be watching, okay, do we show an unwillingness to reject back higher? And as soon as we closed right there, great place to jump in short on that candle there. So that I would have added back the 4 contracts, possibly added back even more, and my stop loss would have been trailed from the original place. I'd be trailing it as we made this push lower to this high, and then as we got that closure back below, the stop loss would be trailed to that short-term high that was formed after we took this swing low. And another key nuance to this that I mentioned during the live replay, or the replay as if it was live, is this swing high. So that's the NFP low that we hit. We then rebound into the range, and the fact that we delivered buy side delivery, taking out a swing high, and then went lower again, that is the criteria that means that, okay, that high could be used as the high of the buy side delivery. And then once we fail to reject and then get this closure right there, back below on the 1 minute charts, then that's a great place to enter right there and pushes lower. Then we also have this long wick. That's also a great place to enter, and the reason why is because one, it's already shown us that it's failing to go back up. It's failing to reject this low, so it probably wants this low. If it wants that low, it's probably going to do it quite fast, like it does, accelerate into it. And if that's the case, I'm looking for signatures that support that. Now, one of the signatures I can look for is one, breakaway gap, so gaps left open, but also when we print a long wick, what is that wick doing? Well, this long wick here on the 1 minute chart is taking out these short-term highs in the 15 seconds. So we're raiding these short-term highs, and at the same time it then drops lower, and this is 13:45, so 45 seconds into this minute candle. That's the final 15 seconds of the candle, and then this is a new 1 minute candle close opening. So the entirety of this wick formed in the final 15 seconds. That means that I can now enter another short right there, and obviously probably a split second later we'll be down here, but this gives me 15, 30 seconds, 45 seconds to enter a trade and put my stop above that high, trusting that this is a real rejection candle because it has a last second wick that formed in the final 25% duration of this candle, of this 1 minute candle. A last second wick means that I can trust that as a rejection in the context of expecting acceleration down to this low, that is 2R already, and likely down to the hundreds, which becomes a good 3R even if we got a bad fill. So that becomes a really nice place to add as well. So really good that I took profits here. I think that is a very, very valid place to do it, and I should have done that on this chart as well. And then once we got the closure back below, I needed to have been looking out for a rejection failure and getting back in right there. Then as we're pushing lower, you can see that I took that partial down at 53 even, exactly what I said I wanted to do. So right there, as we hit the 50s, which is, the idea is that I always take a partial at a deep discount or a deep premium of a range. Here, if there was a swing low or something, that'd be a great place to do it. I could have done it below this 831 candle, but also I use institutional levels, so the 20s, 50s, 80s, and 100s as also good partial points. And so that was what I was aiming for. The lowest institutional level, the 50s, at a discount of this range, great place to take something off. And then looking for that push lower, and I closed out just above the 700s there, or that trade. So overall, this demo execution worked really nicely as well. And yeah, the main things to change: beautiful entry on this one after seeing that long 5 minute wick. It's okay to take a partial here, I guess. But maybe if I recognize this being an A+ opportunity with, as I mentioned, gap up, we have enticements on the regular trading hour chart, enticements on the electronic trading hour chart, traps longs with their stop loss below these lows, so trailed stops as well, and above midnight and above 8:30 makes this a very, very high probability quality opportunity. So when I can recognize that, I should be willing to take a loss for the opportunity of holding on to the trade a bit longer and maybe not taking that partial right there. Although we did get a slight reaction initially, didn't necessarily need to take something off there. It was only, to be fair, it was only 25% of my position that I took there. So I did hold 75%. So I didn't do too badly. But once I saw this rally up, big up close candle, the new 5 minute candle open drops aggressively lower. That's a really good sign. And I should indeed be looking to take something at this low as we hit it, because it's a very key liquidity pool. But once we do so, I'm looking very closely. I'm watching for that impulse rejection failure. I want to see us fail to run higher from this low. And you can see that by the way that we delivered above that 15-second short-term high, and then we show an intention of having a rally by having this up closing candle that runs above, and then as soon as it closes back below, that's showing that it's failing to do so. So you can jump in short right there with a stop at this high, drop lower. I know that we're accelerating into this low, so now I'm watching the low time frame to look for signatures such as this last second wick that would give me additional entries. Once we get that wick and I see it took out this high, it's rejecting low aggressively, and this wick formed in the last 15 seconds, then I can think, okay, that's great. I can now add even more to my position right here. I can trail stop all the way down here and then look for that push lower. And if I'd added a significant portion on here, then what I'd be doing is I'd be taking off a relative portion at a near-term target, which would be the 50s down here, because it's a momentum type entry and it's needing speed and displacement. I'd be looking to cover some of it as well, just to cover risk quite fast. So let's say I got in short here, I'd be covering something here. And then because we're also nearing this pull, I don't want to see any deep retracements. So I'd be at an absolute minimum having my stop loss above the midpoint of this candle. But likely I would want to see this opening price hold price below it as well. So probably be putting my stop loss about here. And yeah, just looking for that push lower into the lows. Once we do push down to the lows, the hundreds tend to be a really good place to take a partial, especially after hitting a major liquidity pull, because even if we're hitting lower, a lot of the time we would come down to the hundreds and then maybe have a rally up from there in order to entice people from this institutional level. In this case, we do drop a bit below it, have a small run up and then drop below it again, but then trailing using the 2-minute trailing stop, and I believe I got taken out right here. So as you can see, that was actually near the end of the trend. And that's a lot of the time that's the case, is that just before the trend ends, it will take you out. It could also reverse straight back up, but it took me out right there. On this chart, on this replay session, that's if we skip forward. It essentially took me out on whatever candle that was, and then ended up making the low just afterwards. So yeah, overall really good execution and super high probability model, and I recognize it to be such. And I did really good on Friday when this happened, because of the fact that I took this entry that was valid. I also did mitigate it on my other account, and I left it at that. It was a green trade, but it was only 1R, and I closed that account, locked myself out of it, and then came over to this demo account. Demo because it's already been failed, but I'm just using it as a practice account, and then I was able to capture the exact move that I was looking for. So it worked out really well, and I was very happy with my performance on that day. Let's exit that actually. And there we go. So that is that model. That is a very nice example of how I go about using it. I'm trying to refine the game plan, like coming up with the game plan for it. Like it can sometimes feel a bit overwhelming, like, okay, what am I looking at? Okay, what's the regular trading hours frame narrative? What's the pre-market narrative? Okay, what could we be doing? But you never quite know what's going to happen until it happens. But what I can do is I can gather the important information, and the important information is what I wrote here: the obvious liquidity that we could be hitting, such as this, the narrative on the regular trading hours, so at the close we were enticing longs, that's good to know. Then the narrative pre-market, we're also enticing higher, and then I just need to see how it plays out, because we might have then created a long wick on the upside to pre-market, and then maybe I'd have, okay, well, we were enticing longs, but also it looks like we're enticing shorts. So maybe that would mean that we would actually head up first and take out that long wick and then head lower. But I can't game plan all the possible scenarios before they exist, because I could come up with 100 different ways it could play out. I need to simply gather the important information, which is gap up and the narrative on both of them, and the high time frame bias and the obvious liquidity. I need to just drag the gather that data and then wait for price to tell me what is happening. And here this gave me the exact entry that I was looking for. We had engineered a low, enticed longs, and then given me my entry model, which is this impulse high rejection to impulse rejection failure entry. I took that entry, it worked, and then it runs straight back up, which is fine, but this was a very valid entry. But then I can continue looking for that trade and just continue monitoring and waiting for something obvious. And in this particular case, we have this M5 long wick multiple times that runs and works lower. And this pattern with the M5 wick happened yesterday as well. So this is Thursday, the exact same model. We even have a London impulse low down here. We have 9:30, it runs up, takes out buy side, and then we have this long wick. So long wick 1, we then make another long wick that rejects that long wick straight back up, so that's showing bullish rejection, and then nothing happens, and then it breaks the low once again right there. So as soon as it breaks the low, you can then put your stop loss above that failure swing and capture that short down into these sell side pulls. So that's the exact same pattern as we see right here playing out yesterday, which I thought was pretty cool. And so I've added that to as a entry model I'm going to be looking out for and trying to develop a bit more of. That will do for this session. Some good practice, and yeah.